guys, JC Parets here of allstarcharts.com, and I am joined by my esteemed colleague, Mr. Sean McLaughlin. What's up, Shawnee?
Man, I'm glad I showed up for the tailgate. This looks great.
Sean hates the Miami Hurricanes, and I hate the Florida Gators, and that's just something that we've always had to deal with one another. But here's a fun fact. Sean's a big Buffalo Bills fan, so I'm wearing a Jim Kelly jersey. So I got
Which
Jim Kelly.
you earned some props for that. So well done, boyo. Well
What I
done.
did there? See what I did there? So big game on Saturday. I'm very excited. It's college football season. Your favorite chart, we'll show that in the show notes. Your favorite chart was the how many days left till college football. That was a good one.
Yeah, that was a good one.
Shout out Stephen Whitesell. All right. So what we like to do here is, walk through the trade, walk through the thought process. The people out there, they don't get to eavesdrop on our conversations, which I really enjoy our conversations because I like the way you think through things, sort of my knee-jerk reaction, and then you're like, no, JC, we shouldn't do that because of this, and I really, really like that, and I've learned a lot throughout that process because, listen, I don't claim to be Mr. Options guy, far from it. That's why, that's what I come to you for. So what stood out, we were in our meeting this morning. We have our analyst meeting on Wednesday mornings, and we were talking about a lot of things. Why did this one stand out?
Well, we spent a lot of time talking about the retailers, and a couple of weeks ago, or actually about a month ago now, we as a collective, we were thinking that, wow, if the market's going to roll over here, then it's probably going to be led by retail. We'd been watching the chart there, and it seemed to be hitting up against some upper resistance after a pretty good run that you're highlighting there on the monthly chart. And that felt like a natural place to roll over. And it seemed to be the weakest among all the sectors. But
Right.
fast forward 4 weeks later, and the XRT is still just hanging there, going sideways. And if anything, it's earned our respect that, oh man, maybe this is telling us something here, JC, that maybe we're about to start running higher against everyone's expectations.
Yeah, definitely. And what stands out to me is, we were saying in our meeting that if the Bears were going to take control, this was going to be the time for them to do that. And they didn't. They weren't able to. And now you have and by the way, this is the equally weighted, right? This isn't a cap weighted, Amazon-led index. This is equally weighted. Amazon isn't even in the top 20 or 30 probably, right? Because it's equally weighted. So they're all around 1 point something percent each. So I don't know. To me, that's really impressive. The more times a level is tested, the higher the likelihood that it breaks. In this case, higher. I think that's really impressive. And then when you look at Amazon, right? So, when you think retail, now you look at the cap-weighted version, which is a giant percentage of Amazon. And technically, granted by a few pennies, but it did close at an all-time high for the month after doing nothing for a year. Is this it?
Right. As you mentioned, Amazon's the 800-pound gorilla in this space. We all know that. And as you might expect, with the XRT going sideways for a while, Amazon itself has traded sideways for the better part of a year. And we had a little bit of a fake out last month. It looked like Amazon was really going to take off. You could see it in that red candle in the circle there. But the rug got pulled after earnings, I believe is the end of July or early August.
Yeah.
Amazon lost a quick 10% or something. I'm just off the top of my head. But the good news is that Amazon traded right down in the middle of that range and held firm. And another thing that we talked about in the meeting this morning was how this whole base that's setting up in the retail space could act as a trampoline for the leaders. And Amazon trading, actually can't really see it on this chart, but if you look on a daily chart, Amazon surely looks like it's taking the action of a trampoline bounce, the way it's bounced off that low from a couple of weeks ago. So our thinking here is, look, retails are setting up. They look like they want to break higher. If they're going to break higher, they're going to be led by the 800-pound gorilla, Amazon. So let's get involved. So we wanted to get long Amazon.
Look, Sean, doesn't this guy remind you a lot of this guy?
Certainly
Maybe
does.
not as long, but you're right.
I actually like this new base better. It's a little tighter. It's a little flatter. I mean,
Well, one thing I will point out is that in this case, the base was beneath, overhead supply, right? Beneath, all of this resistance from these Fibonacci extension levels, right? That go back a long, long time. In this case, we're doing so above those levels, right? To your point, healthier.
Right. So the first question you asked me in the meeting today was, all right, well, let's get long Amazon. What's the best way to do it? Should we be buying calls here? Because volatility is pretty low. And, I said to you, I said, yeah, JC, the volatility is low, relatively speaking. And sure, the play would be to buy calls, but I'm not managing a multi-million-dollar hedge fund here, JC. I don't have just, absolute dollars to throw at this thing. I looked at the 25 Delta calls, which, as we all know, Shawnee loves the 25 Delta calls when he's getting just long calls. 25 Delta calls in February, they're going to cost me $8,000 per contract, JC. That's a lot of cha-ching to be risking on one contract.
I said, all right, let's do the risk reversals then. And you're like,
yeah, so you said,
no,
okay.
even worse.
Yeah, you said the risk reversal. Let's have the puts pay for the calls. I'm like, okay, that's also a reasonable idea. However, in this case, if we sell the puts to pay for those calls, the margin required on those puts is going to be $40,000 per contract.
Stupid, JC.
Yeah.
Stupid.
Look, if you're a hedge fund, JC, I know you're swinging big dollars over there, but for all of our non-hedge fund manager customers and subscribers, they're not going to be holding positions that require $40,000 a margin for a one lot.
Even larger institutional customers, they still don't want to put up that money either. So it's not any different.
Absolutely. So we kind of went down the chain. What's the next best thing? And look, I like the bull call spread. It's a strategy I use often, and especially in these high dollar names when I want to keep my my absolute dollars at risk, controlled as best I can. It's still going to be expensive, more expensive than I like, but we could put on a February 380 or 3,800, 3,900 call spread, meaning we're buying the 3,800 call, selling the 3,900 call. We could put that on for $30. Well, we put it on for $30. You could actually get it cheaper now. Amazon sold off a little bit today, like a lot of things did late in the afternoon today. So people putting the trade on now could actually get it on a little bit cheaper. We're not worried about it. We never get the perfect price when we put a trade on. That's part of the game.
You don't? You don't get a perfect entry every time?
Rarely. JC, 1 out of 150 times might I get the price I actually would really like to have. Anyway.
Peloton trade last year. That was,
Well, that was a perfect exit. We had the perfect exit on the Peloton, not the perfect entry. But anyway, so we paid $30 for this spread. My goal is really simple here. I just want to double my money. So if I get an opportunity to sell this spread for $60 anytime between now and February, I'm going to take it. That's going to be my profit. I doubled my money. That's approximately half of the maximum potential gain I can get in this trade. But here's a little wrinkle, JC, that I don't do this often with bull call spreads. But in the case of Amazon, I actually have two reasons why I will exit the trade. The first is just a general, price level on Amazon. If Amazon can't hold the 3,400 level, that's going to be my signal to exit the trade for whatever it costs me to get out. The other reason I'll get out of the trade is just the value of the spread itself. We paid $30 for it. If Amazon just goes sideways for a while, or if it trades down and the spread just bleeds money and it's now trading at around $15, has a value of about $15, which is half of what I paid for it, I'm going to close it down there, JC. I don't want to take a $30 loss on this trade. I'm willing to. I'm accepting that as a possibility, but if I get an opportunity to sell it, if it's down to $15, that's where I'm out. So those are the two reasons I'll exit this trade. Otherwise, I'm looking for a $30 gain on this trade. I'm going to try to sell the whole spread for $60 if it goes our way.
Listen, Sean, I love your little wrinkles. You've got a lot of rules and a lot of firm rules, but I like how you're a little bit flexible sometimes. I appreciate that about you. Have I ever told you that?
It's always feels good to be loved, JC. Thank you.
Yeah, I mean, you have terrible taste in football teams. Terrible. I mean, at least you're not a Jets fan. That would be that'd be the one way that you can actually be a worse selector.
Well, we could agree on our mutual hatred of the Jets and Patriots, and in the next few weeks, the Alabama Crimson Tide.
All right. Well, everybody's rooting for Miami on Saturday. You think we got a shot, Shawnee?
It hurts me to say it, but even I am rooting for Miami this weekend, so I'm rooting for it.
Yeah, baby, you heard it here first. We can always run that tape back in the future, Sean, so we got you. We got you on tape. Listen, thanks for the trade. I really appreciate, thinking through, right? Because my knee jerk was, volatility is cheap, buy the calls. And you're like, And then I'm like, all right, sell the puts and we'll do the risk reversal. You're like, right? So like, I really like the thought process, and you make great points. And, you know, that's why I stick to my charts, and we leave the options to you, my friend.
All right, buddy. Good luck this weekend.
All right. Adios. Go Canes.